talking about trading and you're talking about all the squiggly lines and the moving averages and even Fibonacci to some extent, it really is just a theory about the market. What does that mean? What does it mean, a theory? People talk about the, theory of evolution or the theory of relativity. What does it mean when you talk about a theory? Well, basically, market technicians. Now, a market technician is somebody who studies charts. Okay, they're not focused really on the fundamentals, economic announcements and things like that. But a market technician, when they focus on an indicator like a MACD or a stochastic or a moving average, and if you're unfamiliar with some of those, you can go through some of our other videos and get the basics on what those things are. But those indicators really are a theory, okay? They're not really describing the realities of trading. So what is the reality of trading? Well, think about it. The realities of trading are this. When you push your buy button on your Forex platform, you are making a trade directly with your broker. It's almost as if you're standing over a counter and you're at the drugstore and you tell the druggist, hey, I want to buy 5 packs of juicy fruit. And he says, okay, sold for $1.50, right? Okay, so the market's very similar to that, where your broker is sitting there. He says, hey, I've got pounds for sale at $1.98, and you say, okay, buy them. So you bought pounds. You are actually making a transaction directly with your broker. When you start piling all the brokers onto each other and put them into a group, and you got the banks and you put them in the group, and the big money center banks and you put them into the group, what you now have are a group of market makers. And literally that means an individual who is making a market. They make sure that you can trade in pounds and in euros and in yen and other things, just like your druggist can make sure that he has a market in juicy fruit or in whatever you may buy at the drugstore, hair, shampoo, things like that. So what these guys did in the early 20s and 30s was, instead of trying to really come up with some kind of newfangled device, what they wanted to know was, how does the market really work? And believe me, after these very short 8 slides, we're going to get right to the market. So stay with me here. This introduction is very, very important. So because they were focused on the realities of trading, they really had a firm grasp on how human behavior correlates, or how humans act when they're in the marketplace. In fact, Wyckoff's book is very famous in some trading circles. In fact, there's a college-level course that's designed entirely around Wyckoff's whole theories. Schabacher had some other theories about the markets and cycles and things, but Wyckoff really dealt solely with when an order gets called into the floor of the exchange, what happens to make sure that the order is then filled or it's rejected. So he studied order flow all the way from when somebody wants to buy, whether they're a small trader or they're a huge trading syndicate, what does that mean? And not surprisingly, at least for me, they mean 2 completely different things. In fact, when you start seeing a large number of smaller traders entering the market, it usually means that's a good time to go in the opposite direction. Okay, it's what Wyckoff found out was that the crowd of small traders in the long run is wrong most of the time.